Bitcoin just got the kind of inflation news crypto bulls are supposed to love. July CPI rose only 0.1% for the month. Headline inflation cooled to 3.4% year-over-year, and core inflation eased to 2.5%. Producer prices were flat in July, and stocks pushed higher as traders cut the odds of another near-term Fed hike. Bitcoin's response was basically, "Great, where are the buyers?" The macro setup did improve. Softer inflation can reduce pressure on the Fed and make risk assets easier to own, and Bitcoin even bounced modestly after the CPI release. But the move never became a durable breakout, and by Friday, Bitcoin was back around the low $63,000 area. The macro menu said risk on. Bitcoin apparently had to pay extra for liquidity. The cleaner clue was the ETF tape. Farside Investors shows US spot Bitcoin ETFs lost $61.1 million on Wednesday, $131.1 million on Thursday, and another $56.2 million on Friday, about $248 million of net outflows across those 3 sessions. That does not prove ETF selling caused every red candle, because markets are never that polite. It does show the institutional bid weakened at the same time the inflation headline became friendlier. There is another piece of the puzzle. Long-term real yields are still high. Reuters reported the US 30-year real yield near an 18-year high around 3%, while heavy borrowing from governments and AI companies keeps competing for capital. In plain English, bonds are still offering investors a serious alternative. Bitcoin got a better inflation coupon, but the checkout price of capital is still expensive. So the contradiction is not really that good news made Bitcoin fall. It is that good news was not enough to create the liquidity Bitcoin needed, while US equity funds were attracting fresh money and corporate earnings were supporting stocks. The market was basically saying, "Congratulations on the softer inflation print. Please attach funding." That is a very different story from assuming one friendly CPI number automatically flips every risk asset higher. Now the watch list is simple. If ETF flows turn positive again and Bitcoin starts outperforming on supportive macro days, this weak liquidity thesis loses force. If flows stay negative while real yields remain elevated and Bitcoin keeps lagging equities, the divergence becomes harder to ignore. Price is the surface. The message underneath is whether the money actually shows up.